Introducing the new Poloniex trading system, now with 30 times faster order matching, 10 times faster transactions, an enhanced user interface, and even more comprehensive features. Trade like a pro on Poloniex. For more information, visit poloniex.com now. Eager to make more informed decisions around crypto using data you can trust? Chainalysis demystifies cryptocurrency by providing industry-leading compliance, market intelligence, and investigation support for all crypto assets for organizations like Gemini, Crypto.com, and BlockFi. Maximize your potential with the leading blockchain data platform by visiting chainalysis.com/thescoop now. This episode is brought to you by IWC. IWC Schaffhausen is a Swiss luxury watch manufacturer based in Schaffhausen, Switzerland. Known for its unique engineering approach to watchmaking, IWC combines the best of human craftsmanship and creativity with cutting-edge technology and processes. Discover the full collection at IWC.com or download the IWC app to experience a virtual try-on now. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of the blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblockcrypto.com/terms-service. Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and today we have a very special guest for you. We were recently in Chicago together. We didn't get any deep dish, but we had a nice coffee. It was fun.
We debated deep dish.
We did. We had like a very intense conversation about it. The gentleman that you just heard is Dan Gunsberg, co-founder and CEO of the Hxro network. So, sir, how are things? What's going on?
Things are wonderful. First of all, thank you for having me here. And yeah, it was a real pleasure to finally get to spend some time with you when you were in Chicago. You know,
was I wearing my Hxro hat?
You were wearing your Hxro hat.
I was. That's right.
And we had a good coffee together and got to catch up and found we had a lot of common elements. It was really cool to hear. You know, you have a background covering options markets and market structure and whatnot, and then your love of food, which is something that's very near and dear to my heart. So
I know we're both big eaters. So explain exactly what you guys do to maybe people who are unfamiliar.
Yeah, sure. So we created building an on-chain primitive for derivative markets built on Solana. So what it does is it provides kind of the foundational infrastructure for exchange risk, things like margin and liquidations, as well as the settlement and clearing functions for market makers, professional traders, OTC brokers, or basically any CeFi or DeFi application, which could be like a centralized exchange, a decentralized exchange, an options vault, sportsbook, prediction market platform, metaverse game platform, can all easily connect into this on-chain infrastructure and access various derivatives marketplaces.
Got it. And so you're kind of in Chicago, so you're in the heart of all of the traditional brokers, FCMs, derivatives exchanges, CME, CBOE, the market makers, the liquidity providers. How much of trading activity do you think can kind of move over to a decentralized clearing derivatives market?
You know, I think it's the approach like we're taking, at least, is very much looking at it as more of a marathon and not a sprint. I think that there is an incumbent setup, in terms of how market structure and just both on the regulatory side and just general technology exists in the centralized world. And there's kind of this incumbent spot. There's this kind of secondary lane that, FTX with LedgerX has started to establish, at least in the context of the United States. And then crypto as a whole, the space as a whole, obviously derivatives have really taken off globally. And then you have this third lane, which is really DeFi. And that's really the lane that we're looking to participate in. And, if you look at the scope of cleared derivatives globally, it's well into the trillions of dollars. So there's definitely a lot of room to capture market share. And I think some of the elements of decentralization and really building out a DeFi network and creating kind of a more inclusive derivatives landscape and solving some of the things around liquidity formation and the disintermediation of systemic risks are all things that I think over time will play in. And so far so good. We've gotten really good backing and participation and resource access from some of the largest trading firms in the world. So they're looking for alternative solutions. We all think the time is kind of right for this to happen. And so I think over time, we'll really be able to plant a flag for on-chain derivatives within the fabric of the derivatives landscape as a whole.
And to what degree do you think we will have decentralized options tied to equities? Is that convergence something that's possible?
Absolutely. I think touching on equities, things like that, you're really attacking the heart of the incumbent centralized world when you get there. But I think all of this over time, like when we built this, we set out with the idea of like asking ourselves, what does this space look like in 3 years from now, in 5 years, in 10 years from now? And I think it's going to take that long. I think it could be another 5 to 10 years before you really start to make a significant impact, and really where you can get real confirmation of on-chain derivatives, things like options markets on equities, really can become a meaningful material part of the derivatives landscape as a whole. So I think it's going to be a while. It's not one of these things that I think are going to fly by night and you're going to see sudden product market fit. And there's so many headwinds, so many hurdles to overcome and work through. Like I said, you're really attacking the heart of the centralized world. This is an incumbency that's been around for centuries now, for that matter. So
Isn't it funny how, at least in this corner of the market, you have weird innovation coming from two different sides? From the centralized side vis-a-vis FTX, Ledger, X, and then from the decentralized side, you guys, and of course there's a number of different futures and options DeFi protocols, and at least Ethereum there's quite a number. I don't know if you have some competition on the Solana side, but the system is kind of being shaken up in a way that maybe it hasn't historically.
Absolutely.
Since maybe electronification, right?
Yes. I mean, I was right there when we went from, at least in the futures markets, went from trading, in the pits. I got my career started in the Board of Trade in Chicago and went to electronic trading, which, very fragmented and felt very much like kind of how crypto markets feel, or felt, since I've been involved in the last few years. And then suddenly it became hardened and became the way that you just did business. And it really is amazing to see the breakthroughs. And I think that we're in this place, and it just kind of, even on the social side of how the world works these days, it's very much driving very much more towards disintermediation. And kind of, for me, that also means like consumer choice. And it really means solving ways to break down barriers and create a more inclusive world for people to operate in. And I think while FTX is doing incredible work, especially along the lines of the United States, and in terms of helping to redefine how derivatives can exist within the context of US regulation, this next lane and the things that we're working on, we kind of look at it as like the next step beyond that. So we're huge fans, and we have a great relationship with FTX and with Alameda and everybody involved there. But we're rooting for it in a big way, because I think as that precedent gets set, it really starts to unlock and open up the, what the possibilities are in terms of this kind of digital transformation of the derivatives landscape and just of the trading world as a whole.
Yeah. You guys are all in that little hub there in Chicago.
Yeah.
You guys have quite the setup.
It moved west. It moved across the Fox River. It was
Yeah.
it used to be down in the LaSalle Canyon where you had the SIBO just south of the Board of Trade, and then a couple blocks over on Wacker, you had the Merc, and now we're all living around the Fulton Market, the West Loop area.
This is going to be the most Chicago episode of The Scoop ever.
Oh. We're going to get in the pizza discussion eventually, or no?
We'll touch on that before the end.
Sounds good.
Are you surprised that CBOE still has open outcry?
I'm not, for the one reason that I think to do some of the complex orders that need to get done, like, and what I mean by complex is
different legs and such.
Yeah, multiple legs and kind of these obscure ways of looking at. I mean, these are, there's still vanilla options underneath it, but when you're packaging things up, the beauty of options beyond the nonlinearity of it and kind of the insurance aspect and whatnot, you really can get creative in terms of how you design your hedges and the level of insurance that you need and how you're exposing yourself and at what levels and all these other aspects of it. But to really execute those, they haven't been able to solve it on the screen to the extent I think that they need to. And maybe some of that is due to technology that they've relied on for years. And when you're getting involved into these types of infrastructure, they can become massive webs of complexity, and it's not been an easy thing for them to solve. And one of the nice things for us is like we get to approach it from a place of kind of a clean palette to work from.
Yeah, well, it's the classic phrase, you're starting from first principles.
Yes.
And so you do not have to be encumbered by the old way of doing things.
Yes.
And, it sounds trite, but it is true to an extent. Once you have an infrastructure that's built up, it almost becomes the antithesis of like Occam's razor. It's super complicated on the inside, but it doesn't necessarily need to be. It can be more straightforward.
Completely agreed. And it just happens through, I guess, osmosis, more or less. Just time.
Yeah. So you kind of explained why you're not surprised that open outcry exists, because of the way derivatives trading has been done, there's these specific complex trades that need to be, or likely need to be, in person to execute properly. Looking at what you guys are building, what type of things can traders do through Hxro that maybe are not possible in the way options markets are set up now?
At a very basic root level, this underlying on-chain architecture and infrastructure that we're building on Solana, first things first is effectively anybody will be able to come and create any type of derivative product on Hxro Network's protocol. So we built the protocol, the core protocol is something called Dexterity. And the idea of it is that it really just is the generalized architecture for the payoff function and the accounting mechanisms of a derivative. So you can give it certain instructions and you could create expiring futures. You can create a perp based on the types of instructions you're giving it. And effectively, if you think about what a future is, it really is a kind of just a zero delta option. So you can create a market depending on what maybe an application or you as a trader want to transact. If that market doesn't exist on Hxro, you can spin up. It could be a barrier option, or it could be some other type of exotic option that doesn't exist, and you can create it, or a combo. So we just talk about complex orders, multi-legged orders. On Hxro Network, you can give those instructions to the market, to the protocol, and effectively hit go. And now you have a market created on it. And provided that market makers join and you have participation in it, you can have a lit market, you can have an OTC market for it, and it will all clear into the next piece of our infrastructure, which is a risk engine that we call Spandex. Yeah. I'm
going to need some Spandex after being in New York for 2 months. I'm just piling on the pounds.
I can't even imagine.
It's rough. It's rough out here.
So, that's what it allows you to do. And then the idea here is that it's built very much as a B2B2C infrastructure. We're just like the underlying kind of software freeway underneath. And then you have applications that are building and composing on top of it. And then consumers will mostly come in through those user-facing applications.
What type of applications?
It could, like I said, could be anything from a decentralized exchange that wants to trade just plain kind of vanilla expiring futures or perpetual swaps, or European cash settled vanilla options, or standardized options as we call them. Or it could be a sports book that is, a decentralized sports book that's looking to do peer-to-peer sports betting, and they want to apply a 0-1 kind of binary future to it. And then the beauty of it is, once those markets are created, they all exist in this base layer protocol, and then any application can tap those markets. They become available. So what you end up with is this unification of liquidity across many applications and many users that all bottoms out into the same marketplace, depending on the product.
So I know you're well connected across the trading world, regulators as well. What's the vibe they have on this?
Yeah, well, I'll start with the toughest one. The U.S. is obviously a very, very delicate and interesting place. And again, our approach, like I have been in conversations proactively with some of the new commissioners, Caroline Pham for one, who's absolutely incredible.
She's brilliant.
So brilliant, and such a proponent for innovation, which has been very exciting. And God bless her seems like she's leading the charge in terms of the kind of SEC, CFTC thing, which the reality for us, it's, derivatives is CFTC, the bottom line. So you have the whole token aspect, but it's a different story. But our take is that we're looking and walking very carefully around that. Like, obviously in the unit, like, this actually is going to be prohibited in the US to start, even though, theoretically it's decentralized architecture and anybody should be able to access it. But we are taking some initial strides just out of caution to make sure that applications that are connecting into the network are, there's a certain amount of geo blocking out from US. And the other thing that we're thinking about very hard, which I think is really more the global question around regulation, is really around KYC and the KYC, AML, and what we call a KYT, like know your transaction. We think there's a lot of room for innovation there, and have been exploring a lot of routes to see how we can help solve, how can you have a decentralized network or system in place and allow jurisdictions globally, and for the most part open, while keeping your network free and clear of, nefarious actors and kind of dirty money, if you will. And we're doing a ton of work there. And we think that's, it's an even bigger question that needs to be answered, as much as, like, does current derivatives regulation apply here? Like, does a DCO model, which is kind of the equivalent of what we would be in the centralized US regulatory stack, does that even, do those current regulations apply? And so
that's the big question.
Huge question. And spending a lot of time thinking through that. And, the only answer to me is, like, this is, again, a long ball approach. And, been fortunate to have some incredible teams around us, big trading firms, and a couple of crypto-based funds who some of their leadership has very deep backgrounds in derivatives, like Coin Fund for one, Chris Perkins, who's been very active with FTX as well on their push into the US.
Does that guy sleep? I mean, he's just
a machine, man.
He's a machine.
Yeah.
He's been on the show before.
I love Chris. He has been such a, we talk a lot about when you get, like, VCs in, it's like really finding ones that can provide value specific to what you were doing. And when we started down the path for Hxro Network, we had, thought about a lot about who we wanted to have involved in it. And he was a no-brainer. Like, Coin Fund was already an investor, but they came into this next round, and it was a no-brainer. And he's really probably what I would say has been one of the best, advocates for us, and it's been great for me to really be very collaborative and, in helping design how we think about things.
He's an Army veteran, and I think just has a degree of loyalty baked into his DNA. Like, incredible. I'm in crypto, he's in crypto, but my godmother lives in Long Valley, and he grew up in Long Valley.
Oh, nice.
And I think the combination of those two things, like I think he'll like take a bullet for me. Like he's just
totally right.
He's just like it's insane. I mean, it's not insane. It's just so.
Yeah, the loyalty. It's someone that you want in your corner, even in a dark alleyway.
Yeah.
I don't know what it is. It's not like he's necessarily a big guy, but he's just that guy that he's a Marine. I mean, he's a Marine. Yeah. So he's and I was, by the way, very careful not to say ex-Marine, because that doesn't exist. I think once you're a Marine, you're always a Marine. So.
Yeah. Absolutely.
Incredible guy, though. Yeah.
Anyway, shout out to Chris. That is an important thing to have. I mean, in a VC, especially in crypto where there's just so much money floating around, you kind of have to add like a lot of value and like really, roll up your sleeves and just prove it.
It's hard. We run the gamut. I've had VCs in who listened to what we were doing, and then, after 30 minutes of very clear explanation of it, somebody says, "Oh, it sounds like this particular swap platform," and we're kind of like, "No, like, were you even listening to? Do you understand what we're doing?" Like, and then once in a while, you come across these groups that really get it at a very deep level, and that they were one of them. And we also have a lot of trading Susquehanna is very involved in jump trading, and Alameda obviously, and so those firms that are steeped, they're kind of deep rooted in both in the CeFi side and the traditional markets as well as crypto. Huge assets being on early. And what we're hoping also is that it allows regulators, as we approach more and more regulators on what we're doing, that say, look, like, we should take this seriously, because it's not like 3 engineers that are behind a pseudonymous, avatar. These are professionals that have been in the derivative space for a long time, and they have the teams behind them who are a part of this project that are some of the largest players in the markets that they cover today. So
yeah, but I mean, to play devil's advocate, I don't know if that will mollify them that much.
Yeah, maybe not. We'll see.
Because I mean, if you think about like the 3 Arrow situation, they were supposed to be the smartest guys in the room.
Yeah.
Not to compare any of the folks trading on Hxro.
Let's not do that.
Introducing the new Poloniex trading system with 30 times faster order matching, 10 times faster transactions, an enhanced user interface, and even more comprehensive features. Trade Bitcoin, Ethereum, and over 30 other perpetual swap contracts with up to 100x leverage on Poloniex futures, and earn staking rewards on a variety of tokens. Trade like a pro on Poloniex. For more information, visit poloniex.com now. Are you eager to make more informed decisions around crypto using data you can trust? Chainalysis is here to help. Chainalysis demystifies cryptocurrency by providing industry-leading compliance, market intelligence, and investigation support for all crypto assets for organizations like Gemini, Crypto.com, and BlockFi. Gain unparalleled visibility and maximize your potential with the leading blockchain data platform by visiting chainalysis.com/thescoop now. This episode is brought to you by IWC. IWC Schaffhausen is known for continually innovating within the world of Swiss watchmaking. A pioneer in the use of titanium and ceramics, IWC today specializes in highly engineered watch cases manufactured from advanced materials such as colored ceramics, ceratanium, and titanium aluminide. This year's collection includes colored ceramic pieces in Lake Tahoe white and woodland green. Discover the new collection at IWC.com or download the IWC app to experience a virtual try-on now. Let's unpack, the benefits of the blockchain is the transparency.
Absolutely.
And first off, even just like market data on the centralized side, like you can't just like see what's going on at CBOE. It's like all the Bitcoin options market data is all there. You can see it. But with a decentralized protocol, you can sort of unpack a bit more. There's way more transparency than in traditional markets, which is a powerful tool. But on the flip side, there's maybe more technical risk.
for now.
So there's less counterparty risk, but maybe a bit more technical risk with, Solana, right, is known for being down sometimes. So how do you navigate that technical risk to an extent?
The way I think about it is, and I hate to say this because it's such a meme, but we are early in the technology here.
We are early.
This is not
still beta.
We're still beta, and we probably will be for quite a while yet, right?
Yeah.
So you have to have a little faith that some of those hiccups are going to get solved over time. And I look at crypto as a whole, even what we're doing as like, I don't want to use the term petri dish because I think that gives it a negative connotation, but it's almost like you have this massive community of test pilots, more or less, who are willing to, put their dollars behind ideas, especially in the DeFi space. And that's kind of, really where we're pointing towards, and willing to test new ideas and new experiments. And these are big experiments that people are working on. And some of them are better than others. And some of them come out of left field that you would never think become a useful tool, but somehow it finds market fit. And next thing you know, it's the way that people are conducting business. And I think for us, back to the transparency point, you have this concept of, a couple of things. One is you have this concept of running risk in real time and having some level of transparency around risk. And I think that when you've seen some of the largest, more systemic events, even in the case of Three Arrows or Luna, it all generally starts with some human error. It's always this element of human involvement and bad human judgment or errors in judgment that cause these issues. And the issues start small and then they metastasize because of more human error. And human error might be ego, or it might be megalomania, or it might be just somebody was asleep at the wheel. Like, who knows what it is, or a confluence of many things. But I can tell you this much, like when you start thinking about that stuff. So having inline risk that runs in real time, that allows good level of transparency, which again goes back to data. And I think it's one thing that regulators, and I'm assuming they've started to pick up on it, but having that level of transparency, even for on the regulatory side, as we start to think about how this all fits into that context, regulators I think they're pleasantly surprised at the amount of information that you can get off of blockchain, and the fact that it really can't be compromised. The other thing too is let's just take like Eurex, for example, which is a large centralized exchange. Like in 2020, they had over 3,000 margin breaches, with the largest one being close to $800 million. Or you can take like the OCC, which Options Clearing Corp, for people that don't know what it is, like they had a $2 billion margin breach in 2021. $2 billion. And so nobody is immune. And I think that a lot of what you solve with transparency on chain is the ability to get in front of these things. And then also, as you evolve the technology, which again, like what we're looking at now, and like we're just in this long beta period, as you evolve the technology, you remove the human element. And as we said, like humans are more prone to error, and it's not to say that it's going to come without hiccups. And I think we just have to be prepared for that. And if you kind of zoom out and take a longer term approach to it, you have to have some belief that you have very smart people around it, and these problems get solved.
My father used to say, to err is human, to forgive is divine.
I like that.
I think he got that from Kung Fu Panda.
I like that one.
Yeah.
Kind of up there with like the no good deed goes unpunished, and
no good deed goes unpunished.
All these other ones.
That's true. Yeah. Have you ever seen your neighbors bring in the groceries? Apparently this is like a thing.
Wait, what? No, I'm lost.
Have you ever seen them? Like, I feel like I've never seen my neighbors carrying groceries.
Just in my home life?
In your life, just like
I've never seen my neighbor. That's actually wow.
It's a thing. It's a thing.
Wow.
Yeah, it's
is
a
that
thing,
a new
apparently.
thing?
No, I read about. I think I saw it on Reddit, but
wow.
So listeners, if you've ever noticed your neighbor bringing groceries, let us know, because I've never There's threads. There's like Google it, and it's
I
like
can't
everyone's like,
wait. So
it's almost like the
what would be the reason? Do they pull into
it's
the
just a
garage, shut the
truism.
garage?
No, that's one element. You know, if you have a garage, you'd probably drive the car in. But even so, I think about my own grocery experiences. Like sometimes I leave the car when I lived in the burbs.
Yeah.
You know, I just leave the car out and bring it in through the front door. But my theory is that like it's tied to this phenomenon. Like we're so like humans can only focus on one thing. Like we're really bad multitaskers.
Yes.
And there's been experiments where, you know, they tell you to focus on one thing in the video and then you miss like the gorilla in the
Got
back
it.
dancing.
So it's actually happening. If you wanted to see it, you could see it, but you're too wrapped up on myopia. Yeah.
Exactly, on crypto to notice what's happening around me. Anyway, I digress. So what should we expect out of you guys over the next couple weeks and months? I think you have a lot of stuff coming in the pike.
Yeah, we're in this sandbox alpha state right now where we're doing a lot of testing, and some of the market makers and applications that have committed to building to it and participating early on are doing so now, building to our SDKs and to the network's SDKs. And the game plan is to move into a state where we start opening up with USDC collateral. We're going to do it with capital blocks and kind of take a cautious crawl, walk, run approach to it, and then start to open the gates up. And a lot of things happening on the staking and reward side, and a lot of incentive structures built in that are very much akin to what exists in the CeFi world, except now they're open for everybody. It's not like you have to be a member of the exchange in order to access them, or own 7 seats and have a 106J membership to access certain levels of incentives. They're, you're a small trading desk in Nigeria, you can have the same access that a large trading desk in Ireland has, and there's something very cool about having something inclusive like that, and really setting it on a path towards progressive decentralization. And once staking launches, there'll be more things happening around governance, and we'll grow it from there. And it's going to start with pretty much the traditional perps and futures. Like the Bitcoin contract has a perp and then 8 futures behind it, 8 expiring futures, so 2 weeklies, 2 monthlies, 4 quarterlies. And then because of one of the features we built into the Dexterity protocol is the ability to do combos or spreads. So there'll be calendar spreads, butterfly spreads, which are 2 spreads against each other, things like that. There'll be markets for those.
The butterfly spread's been real topic du jour.
Has it?
Well, apparently it's like the new big thing in Ethereum derivatives. Everybody's putting on these butterfly trades, and that's why we've seen this like surge in open interest and volume.
Okay.
Yeah.
Makes sense.
And actually the ratio of, we actually have this on the block data dashboard, the ratio between spot and derivatives trading volumes for Ether it's literally exploded.
Wow.
And for the first time ever, this is actually pretty interesting. Ethereum options open interest is higher than Bitcoin's.
That is amazing.
Which is kind of cool.
I think I need to go look at that dashboard.
Yeah, you do. You need to look at it now. It's the flippening no one's talking about.
It's the precursor to the flippening of the flippening. I love it.
Well, to be fair, like I don't know how sustainable it is, but effectively, and you know this, but when you put on these trades, right, you effectively are trading various different options, right? So the volume that you would do to do a butterfly
it's multi-legged.
Would be higher.
Right.
It's multi-leg. So you go from just like, you go from one trade in a sense to 4.
Right. Because you have the wings and then 2 in the body. So,
yeah. And that's why they call it a butterfly.
That's right. The way that, we think about what we're doing butterflies in futures first, and then we'll obviously have those in options as well. But yeah, conceptually, it makes a lot of sense, because even if you think about the CME, for example, the short-term interest rate market, so CME Eurodollars, or SOFR now it's becoming a bigger one.
Mm-hmm.
You have serial months, and then you have 4 quarterly contracts going 10 years out. So you have 40 contracts that trade. And then you have every spread permutation of those contracts. So that could just be a regular calendar spread of one to another one, or it can be butterflies, which is one spread against another spread, or it can be double butterflies. And they have markets for all these things. And then they have what are called packs and bundles and strips and all the, like, there's so many permutations, but you think about the volume that comes in from one account trading butterflies against other butterflies versus an account just saying, trading up, down, just punting
vanilla options.
And I think people, and what you start to see, like kind of the next layer of that is you get a new dynamic of why people get involved in the market, why they take a position. And that causes more crossing of bid-ask spreads, which begets more liquidity and gets liquidity more competitive, things like that. And
well, that gets to my point, which is, let's try to explain this for normal people. When you have a market kind of get more complex like that, or the derivative products in that market get more complex, these more multi-dimensional, multi-leg trades happening, I'm sure some folks are thinking, okay, is that good? If I just have regular ETH, as a person, as an investor, obviously I'm inclined to assume that more complex strategies happening above that is a good thing, or maybe not. What does that mean for like just the robustness of the market?
It's everything. I mean, it's one of the principles that we predicated the building of Hxro Network on. It's that you have to solve for liquidity and duration. Like, I think the crypto market's very used to seeing this front month or perp liquidity. Like,
yeah, it's like 8 hours out.
Yeah, exactly. And it's huge. Now, but take that and extrapolate it out over, now you have futures going out a year or 2 years even. And then you have the relationships of those. So if you take two futures you take a June future and even like a July future, expiring future, those are 1 month apart. They theoretically, unless there's something in between June and July to make the relationship of the two dynamically change, they're going to be pretty correlated to each other. And so there's a whole market around trading the relationship or the slope of that June future to that July future.
And that information's valuable too.
Massively.
Massively valuable. It can indicate like the health of the market to an extent.
Absolutely. And so now when I'm trading that, let's say I'm a market maker, I'm maybe providing liquidity on both sides of that. And I'm providing liquidity in that spread, and then I'm providing liquidity on the legs. And so what I'm doing for the marketplace, for the person that comes in and just wants to buy June futures or buy July futures, there's magnified amounts of liquidity. That's actual real liquidity. It's not fake. It's not there to do all this bullshit that happens in, so many protocols with wash trading and stuff. It's legitimate. And it's legitimate open interest, and which is one of the things that we've really made some big advancements in, is Spandex it's all based on portfolio margining. So if you have an outright, for example, let's say you just had a June future, you're going to be margined based on just having that June future. But if in that same account you're short a July future, you're going to get the benefit of the correlation of that spread, and which means that your margin is going to go down dramatically. So trading that way also, and kind of trading around an inventory of tightly knit spreads, is very much a strategy on its own. And it also is a very capital efficient way to trade. Now, are you getting the same bang for the buck that you get when you're punting on perps? Or, it all comes down to how you think about your trading. You're definitely not going to get the same kind of dopamine kick off of it. But, at least historically, and being, 25 years in trading, it's always been kind of the most professional firms, unless they're doing like ultra low latency trading. And even then, they're definitely doing a lot of spreading. A lot of the big shops are, very focused on spreading and trading around a big inventory. And, we're very excited to be bringing this to the marketplace, especially on Solana.
Do you think it's fair to say that the crypto industry brought into existence this perpetual swap?
Yeah.
Or have there been other types of iterations? Like, that's kind of like
our claim to fame.
Maybe, at least on the derivative side, we're going to have a whole bunch of new claims to fame out of DeFi.
Absolutely.
Derivatives. But on the CeFi side, that's like,
I mean, that was OKCoin the first one to actually have it?
It was either them or BitMEX.
Yeah, I think it
Probably.
was them and then BitMEX, and maybe BitMEX did the inverse swap. But yeah, man, that thing, I mean, I've been here since 2015. Even back then, I mean, that BitMEX contract had some juice to it. There's no doubt about it. But
Yeah.
that became the new degen casino for a long time, for sure. But obviously, as you know, I think as more of professional traders come to the marketplace, you start to get this convergence of the BitMEX style degen casino with these other aspects of market structure that are really important, I think, to the long term, to the longevity and general development of market structure, especially in the DeFi context. So exciting times, man.
Yeah, it is. There's a lot to look forward to,
Absolutely.
and we'll have you on again.
I would welcome it.
You know what I liked about this show is we have some listeners, and sometimes they'll tell me that they like the show, and the thing that they say is we straddle like a really great line of it kind of being wide ranging in terms of
Yeah.
audience type. Like people cannot know about the subject, but like understand the conversation.
Yeah.
But it's not in a way that's dumbing it down. It's just walking through things in a very like thoughtful way. And even the experts, like I would hope, maybe some of your counterparts at some of these large derivative shops, like they're not going to feel like they're listening to something that's 101, and like both get served in a sense. And I feel like you did a really good job, but I would love to do just why derivatives matter. And that's
Oh, I
great
could.
for SEO.
Yeah, we could go down that wormhole. I would love that.
And like what they are. It's weird though, because like I almost think about like, is that a different show? Like, is that like the Scoop Explained? I don't know.
Maybe it's multiple people. One of my colleagues from Hxro Labs just gave. This is a guy who's an ex Citadel, ex DRW, MIT, University of Chicago. Like, I mean, he's a killer, and he did an incredible job. He just did a derivatives 101 at a workshop we were doing at a Solana Hacker House, and he did an excellent job of explaining it. And then he went a little bit, like some of the slides were like, it was definitely getting a little more advanced, but I think he did it in a way that really, like you said, you didn't have to be the gigabrain derivatives IQ in order to understand it, which is important. I think, at the end of the day, people look at this stuff and when they're new to it and they see the perp and then they get excited and then they feel the juice of it. And that doesn't have longevity. It's certainly exciting, but what's exciting is when you start to understand the real needs for these and what moves these things, and it opens up so many opportunities for trading that I think people are really kind of foreign to still, and hopefully we can open them up to it.
Yeah. Well, you guys have all these weird terms for different things.
I know. Lots of them.
There's lots of them. Well, anyway, thank you so much, Dan Gunsberg, for joining the show, stopping by and chatting about everything that you guys are working on at Hxro Network. Thank you so much.
Yeah, thank you, Frank. It's such a pleasure to be here and really appreciate it.
Where can our listeners learn more about what you guys are working on?
The foundation website is hxro.network. And then you can go on Twitter. It's at HXRO Network. Or you can follow me on Twitter at HXROBTC. Plenty of info there. There's in the bio of the Twitter, there's a link to Discord. Great place to go find info. Website's got tons of documentation. And yeah, that's it.
Fantastic. Thanks again.
Thanks, Frank.
The Scoop will be back for you again with another great guest. Have an awesome day.